Bitcoin just crossed $120,000, up nearly 30% year to date. We think it's still in the middle innings. Our price target for Bitcoin has been $200,000, and we still think it can eclipse that level in 2025. Three main things driving this rally. The first is institutional demand for crypto, and Bitcoin specifically is surging. If you look at Bitcoin ETF inflows, recently they crossed $1 billion in a single day. Meanwhile, the Bitcoin network is only producing 450 new coins per day. So demand is just merely exceeding supply. The second is regulatory. Regulation is turning from a risk to a catalyst. We're just coming off the back of Crypto Week in Washington. Trump signed into order a bill called the Genius Act, which is setting a regulatory framework for stablecoins. So all of the concerns about regulation on crypto are now turning from headwinds to tailwinds. And lastly is just the macro backdrop. There's a lot of concerns about fiscal deficits mounting, about the US dollar getting debased, purchasing power eroding over time. And meanwhile, liquidity is continuing to surge. So as the US dollar weakens, that is a strong case for Bitcoin as a structurally scarce store of value. Now, in terms of what's next, we think the technical backdrop is very strong. All these upward moving averages have been providing support for Bitcoin. Meanwhile, volatility is quite low by historical standards, and there's not much price discovery above these levels. So we think upside volatility could be extreme in Bitcoin. And at the same time, if you look at Ethereum or other more speculative altcoins, those are just starting to participate in the rally the way Bitcoin has. And typically that signals to us that we're still in the middle innings. Once these meme coins and the speculative fervor really takes off, that could be signaling that we're in later innings, but we're not there yet. So zooming out, our thesis on crypto is really simple. Crypto is entering its institutional era. We believe Bitcoin is digital gold, Ethereum is financial infrastructure, and our equal weighted approach to each of those two coins reflects that approach. And lastly, we believe that even just a small allocation to crypto can do wonders for portfolios. If you look at a typical 60-40 portfolio, even just a 2.5% allocation to crypto can meaningfully improve its risk-adjusted returns. So zooming out, we think this rally is real, and so are the risks, so is the volatility. But if you have questions, like, subscribe, reply below, let us know in the comments. We'd love to help you figure out if crypto can be right for you.